Oh my goodness. First of all, I mix and match. So it makes it look like I have more than I do. But also, I don't want you guys to either get bored or question whether or not I'm doing a new video. So therefore, I definitely do. I've been collecting vintage jewelry for many years. So I have, I have a nice bit of it. As far as the clothes go, I'm really more interested in the colors so that you're really clear that this is a new video. And also it looks pretty.
2 questions, go ahead.
Okay, so Sneezing Panda asks, Tony asks, okay, so Tony asks, please explain what it means to have a low yield and oil, and I'm thinking you're asking low oil prices together, okay? All right, those are, I'm going to break them down and then put them together. Low oil prices, if we were in proper price discovery, oil, you're talking about a tangible asset, even though they've managed to successfully convert it into an intangible instrument. But low oil is an indication of a declining growth in the global economy. Now, a low yield is about trying to stimulate the economy, and since we're debt-based, getting people to take on debt. In this particular environment as well, the low yield is an indication of a flight. This is crazy to me personally, but it is an indication to a flight to safety because people are concerned and scared about what's happening in the stock market. So essentially, when you take low oil prices along with the low yield, that's an indication that it's not good out there. That's what it really is. And we do have to talk about oil, so I'll put that on my agenda. Megs, could you please, so we'll be talking about it soon. There's just so many things to talk about, but that's what it indicates. Okay. Sneezing Panda asks, if credit froze and the U.S. came to a complete halt, and by the way, this morning I heard, but I couldn't find his quote, but I heard him myself, so I can say this, that Mohammed El-Arian said that the high-yield credit market has frozen. This is not good. This is what we're going to be talking about the next time. This is not good. So, if credit froze in the U.S. and it came to a complete halt, how long would I expect it to take for the government to bring back order? Seems like the elites would want trade to continue in the States and not chaos, no? Well, okay. Remember Rahm Emanuel, who said, and he's not the only one that said it, never let a good crisis go to waste. One of the things that I learned when I've done my studies, and it's an interesting thing to do if you have some time and the inclination, is to start looking at the current laws and then follow the string of the evolution of that law all the way back. And when I did that on the laws that pertain to gold, what I started to see, the picture that I started to see, is that in many cases, crises were actually created to move forward an agenda. So, look, they know that there's no more value left in the dollar. That's why they have to go to negative rates to attack principal. And they also need to get cash out of the system so that, and gold, they did the gold in 33, but, with all the manipulation of the spot gold price, they don't want you holding anything that can prevent them from doing what they want to do. And so you really do have to understand, okay, so if the high yield has frozen, that's the first piece of it. And back in 2008, perhaps some of you remember that once credit started to freeze in the CDO department, collateralized debt obligations, so that derivative, it was 24 hours and the markets were frozen. I don't really think that they're going to want to bring back order because I think that they're ready. I think enough risk has been transferred. So, I think what they're trying to attempt to do is to engineer a gradual shift. But what we're seeing, and with the lack of liquidity in the markets and that narrow base of buyer, we could well see that they've lost control, because the ETFs and the algorithms that are momentum trades are really the ones that are in control of these markets. And you really have to understand it's always an evolution, and it's so interesting when you look back in history, and we can go back to 71 when Nixon really handed over all of the control to the central banks when he disallowed governments, other governments, from converting their dollars into US gold. I mean, essentially what he did was he gave all of the power to the corporations. And, now, in an effort for Wall Street to make more and more money, and using the computer tools to reduce those costs so they could make money, what they've really done is they've cut off their nose to spite their face. Because now, starting in 2000, there wasn't enough money in there for those banks to take that risk to buy and hold, which is really quite a big deal. Because with what's happening with Apple right now, and remember I showed you a month and a half-ish ago or something like that, where Apple is the most held stock in all of these index ETFs. And so you've got this herding mentality. But the problem is that, let's say you've decided to sell that ETF. Well, you, at the moment anyway, can do it today, but the ETF manager is not paying that ETF in cash. It's maybe paying the shares of the underlying stock, if it's an index fund, to the authorized participant, which could be Chase or Wells Fargo or Merrill Lynch or, one of those guys. Now, this is really, and I definitely put a whole slide together on this, so we're going to be talking about this very soon. The problem is that they're being pushed into kind of being market makers and holding not just Apple, it's all of those big FANG stocks. You'll see that. I actually did one on November 12th. Is when I did that piece on, so Megs, we'll make sure, let's put the link to the November 11th YouTube video I did where I talked about the ETF's role in Apple, because that's what I'm really concerned about. I'm not so concerned about Apple stock falling in, fiat terms. I'm more concerned about now the banks really getting congested with a lot of Apple shares. How long can they hold it? Have they already started selling it into the market? That's why I look at volume so much, because it's when that piece happens that we could well see a bigger freeze of the markets. Though we're seeing these mini freezes, right along in the ETFs, they just happen so fast and out of your view. You don't see it. But I think it was the Wednesday after Christmas where there were at least 40 trading halts in the ETFs. And back when that was tested in, I think it was 2015, might have been 2010, but I'm pretty sure this one was 2015. There were like 1,200 trading halts when the markets were falling apart in 15 and 16, when the currency pegs started breaking down in Europe and globally. It's a big deal. So, yeah, I'm sorry. That's the whole problem. The government doesn't really have any tools. You've got most of the interest rates anchored at zero. You've got something like 8 trillion negative yielding bonds, and you've got bloated balance sheets. And you've got a lot of these unique derivatives that are now fully integrated throughout the system. Yeah, no. No, I think they could be ready for our chaos. And keep in mind too, because I've shown you this, where you have the insiders selling out, and at the same time you have those institutional buyers, which means pension fund manager, mutual fund managers, ETF managers that are buying while the insiders are selling and covering up. So there's been so much cover up. I think now the tides are reversed and we're getting to see the garbage, and we're getting to see real price discovery, which is a whole lot lower than where it is right now. And let's see, Denver.
Okay, go ahead.
What?
That was the last one.
Oh, that was?
Yeah.
What about?
No, we don't have time for any more.
Oh, okay.
Exactly.
Okay, well, so that's it for today. Next week, I'm going to do an interview with Dustin Nemos too. And he's so bright that I really love our interviews, and he's become my favorite millennial. Okay, there, I said it. So, and don't forget about the event that we have coming up. We do have a few more seats left, but it's starting to get tight, and it's important because that is a planning event with lots of one-on-one, and we are keeping it small so that whoever does attend in that group will get as much one-on-one attention as possible. And you got to have a plan. Come on. You got to have a plan. So if you have any questions, call your precious metals consultant. Go on itmevents.com. You can take a look and get an idea of what we're doing at that event. And, the link to subscribe is below. If you like this, give us a thumbs up. And remember, shields are made of metal, not promises, not paper. So get your shield and protect yourself. We need this now. And gold and silver are a bargain. They're the only undervalued asset out there, in my opinion, and actually, technically, in many people's opinion. Even mainstream media, even CNBC and Bloomberg are now touting gold. I think that's really interesting. But if we can be of any service, please give us a call. That's what we're about. And until next time, please be safe out there. Bye-bye.